So today we're talking about a company named Antithesis. They are just raised their Series A for 105 million back in December. And we're going to chat through whether we think they will scale or fail today. So, Dimitris, you have a little bit more experience in the developer space than I do, although I just became a quick study on all things developer tools. But you want to explain what the company does?
Yeah, so okay, I'm not an engineer, so I got to make that disclaimer before I open my mouth. But I think what is interesting is the space that they operate in. It's in testing. I think they define themselves as a platform that is commercializing deterministic simulation testing, DST. That is defining infrastructure play to reverse um, the degradation um, uh, of the testing process. And I think it encapsulates the entire software systems with a proprietary deterministic hypervisor type of feature, right? So this is not an easy problem to solve, but the way I I see this is like having a product that is running on your computer. It's carving the part of that um, environment, and is just putting the system on that is start testing, in a more deterministic way. Deterministic means that it's just a very defined has a defined tasks, and it's just performing them.
Yeah.
So yeah, that's what they does. That's what they do actually. That's what the product does. Yeah.
Yeah, it's a fully simulated environment and it says it can perfectly reproduce bugs without touching production. And so for companies like financial tech, AI infrastructure, data platforms, blockchain, some of these more complex distributed systems, this is a really important thing for them to figure out how to do. I started to dig into what else exists on the market to try to draw some parallels. And there's not any really direct competitors doing this, but I think there is some conceptual competitors. So you have chaos engineering platforms, which basically um, test against staging or production, but it's not fully deterministic. There's simulated copies, right? And so they try to inject failures into the system and see how the system responds to it. So it's like they love chaos in the name of these companies. Chaos Mesh, Litmus Chaos, Chaos Monkey, and then you have network failure simulation tools, which Chaos Mesh is too. Blockade's another one. And these let teams simulate bad network or failures, and see, how the system responds to that. You have high-end testing and QA automation tools. So a lot of these are AI-driven tools. They basically focus on end-to-end test automation. So they use AI to generate um, and run a test or improve coverage. And then you have AI agents or simulated platforms, which is kind of like the emerging overlap. So these are using AI agents to go and simulate and evaluate platforms that test agents across, thousands of predetermined scenarios or pre-production scenarios. So these are really focused on LLM and agent behaviors rather than distributed systems. So that's kind of like the alternative options that companies can go to, but it's a little bit of new category creation for them. What are your thoughts in terms of like competitors? Did I miss any? How are you thinking about their category?
Yeah, I think a lot of competitors just are they're left behind, based on what they achieved building their own engine. That is just focusing on a completely different aspects of what was on the market before. That is of course having it's creating a pressure to continue getting funding for that business. And on the other hand, you definitely focusing on the enterprise business, selling to, right? So usually in those cases, you see businesses that are their weakness becomes of you can't sell to the something that is small company or is just conducting something that is maybe less expensive. It's done different method, but it's doing the work and it's not scaling as the um, antithesis can actually provide their service, right? So it doesn't have a direct, an obvious, at least not an obvious
Direct competitor,
um,
yeah.
competitors. I think I found something that was called Foundation DB.
We'll
Um,
get into that. Yeah.
yeah, and Tiger Beetle, VOPR. Seriously, I don't know what it really means, but but that category on its own has it's just having a different approach. It's just a different method of approaching the testing itself. Um, I think the product is offering something that was not necessarily offered before to these companies. So it's really hard to find something that will be one to one competitor.
Yeah, I think you said a lot of interesting things there. So it's often, they're going to compete against build it ourselves mentalities of like, we already have testing simulation, we can do it ourselves. Um, Foundation DB is interesting because the founders they built that. So the founders of Antithesis built Foundation DB, which was sold to Apple back in 2015 and now is an open source system. And so they basically took what they built with that and are building something a little bit new that's like this full production ready system. But to your point, like not every company needs to or business needs perfect execution in their platform, and it's really expensive to have perfect execution, and so you have to basically find the balance of, like, how much are you paying for tools, how much testing are you doing, because the more testing, you're doing, the slower your product launches, right? So you have to, like, figure out what that balance is, and there's a lot of, in the I can speak about the ad space, like Google and Facebook release things with bugs when it comes to advertising. Like, it is not a perfect system because it doesn't have to be. It's not financial tech, So I think that to your point, they're going to do really well in enterprise in systems where customers or businesses don't have much tolerance for platform errors. We can get into that a little bit more on the go to market side. The other thing that I was thinking as I was doing research was I was like, "Is this an AI company?" Um, because it's definitely a developer tool, and a very interesting one, but I was like, how and where does it use AI?" And it is indeed an AI company. I think it's a core ingredient to how they basically go and explore the platforms that they're testing and tries to break the system. So, they're really using AI to, inject things, to make things fuzzy, to explore millions of paths and uncover, like, really rare bugs, which makes sense, right? Like, the AI can produce a lot of things quicker than a human can. But it's not just an AI company. Like, I think they have this core moat that you've mentioned, the deterministic simulation engine, but the AI helps that engine work even better. Is that kinda how you think about it?
Yeah, I think there are a couple of things that they I think solved. It took them a while. That's why I think they had such a large
Funding round?
seed investment round, which is um, it's not normal, typical. You get a 47 million as a seed to build something. But I think the market is really incentivizing these VCs to double down on this, especially if you have a founders that were in this space before and they had a successful exit,
Yep.
right? So I'm guessing, I don't know this, but I'm guessing that the same people who needed to convince these investors, telling them, look, um, we've done this, we sold the company, maybe prematurely, but there's still a way, there's still a lot of things we can do, and here's an idea. So yeah, I think it's definitely more than that, right? But I think the key element of the solution here is you have a hypervisor that we mentioned on the product side, and it's just think of this as a simulator, right? It's a piece of software that creates a virtual computer inside a physical computer, right? So that's what I mentioned at the beginning. It's just carving out the element of your infrastructure. Um, I think it's deterministic. We mentioned this, right? So it's entirely predictable, and it means that it removes all the randomness, right? It is a special simulator. Time is fake and controlled. If the simulator says at 12 p.m., it is that time forever until the simulator decides to move the clock forward, right? So you have to keep that in mind. That is kind of a part of a signature solution that they have. And I think then if you start digging deeper, you start understanding that you know um, that AI is intertwined with a lot of other things that they do. But among many, there's a um, they're calling this a thing, the Terminator. It's like a it should work. It works almost like a Truman Show, right, or Matrix. For your software.
Creates different
Um,
realities.
exactly. So it's almost like creating multiple what if scenarios, right? And it could be just tiny differences, and test all these like if you do this and then this happened, at that time or 1 second after, it's fine. But if you do this 2 seconds after, that is just there's a failure, right?
Yep.
There you go. So it creates constantly these um I think what it's called a thread serialization, where you have all these variables, right, that are happening.
You're using words I don't
Um,
know. You sound really smart, though.
yeah, yeah. I mean, of course, I needed to do my own research just to sound like someone who knows shit. But pretty sure the people who are listening to us, they'll say, okay, this guy is maybe not an engineer, which is true. Trying to do my best and translate this into the plain English. Yeah. So um, I think the serialization refers to like a single line, file line. In normal computers, juggle many balls at once, but I think this system puts the balls in line and processes them one by one, so nothing gets dropped. Right. So I'm thinking about this. Okay, it's putting the order in this environment. Right. I think another piece that is important um, is the time abstraction that I think the system does. It's a fake clock. The software doesn't see the real time. It sees whatever time the simulator tells it to see. Um, so I think that's a I think a crucial element of the solution. And also, there's input and output randomness, right? So if you think about testing, yeah, that makes a lot of sense, right? But it could just, for instance, create a fake phone lines when the software tries to call the internet or generate the random number. The simulator intercepts the call and gives a pre-scripted answer, which it really sounds like a science fiction, but it's real. It's here.
For maybe people who aren't engineers listening to us, like, it's so there's lots of, as we were saying, there's lots of tools to test, pre-production or even production environments, of platforms, but the majority of this feedback is actually done with, like, internal users or customers using the product and reporting a bug because it is really hard to create to one, understand how will customers actually use your product. Like that is even a hard problem to understand of like what will they do and what is the order they're going to take and what are they going to run into. And for like, a team of engineers sitting there, they can't recreate all those things because they have their brain in their way and they built it and they think it should be used this way. And so then often what companies do is they run some testing tools. They have internal teams. Like I'm someone who's like going in their product and I'm trying to break it. Like that's what you're trying to do. You're trying to break the product and see where the bugs come up. But ultimately, you're never gonna find all the bugs. And so then you release it into a beta or an alpha, and you tell customers, like, "They might be a bug, but we'd love for you to use it, and please give us feedback." Essentially, what they're doing is, like, they're saying, "We are testing for everything that might ever come up." And that is, again, something that hasn't been available really before, but also is probably a hefty implementation too, which I'm sure we'll get into in terms of once we hit on go to market strategy.
Yeah, yeah, I see this the same way. I think it's almost like it's like a pre-launch testing that is really done thoroughly. And we just can't, as a humans, we can't really think through all these possible scenarios. But I think machine is designed to do this. Um, so, so yeah, that's what I think they embrace, and they started to put it in a kind of productized form. It took them a while to really build this product because they were in stealth for a while. It's not a few months project, and selling yogurts online. Which, like I said, is putting them in the kind of category of enterprise software or high reward, but long selling cycles mode. So I don't want to get ahead of the go to market yet,
Yeah,
but yeah,
I know. That's where both of us, our expertise comes in. So let's talk a little bit about this round. So yeah, they did their
insane.
it is a pretty insane round. So they raised what 47 million before. They raised that in 2024. So their latest round, like I mentioned up top, 105 million Series A, which is a huge Series A. It looks a little bit more like a Series B than a Series A. Um, and the investors are some are like, yep, those make sense. Like those are people you'd expect to be investing here. I think Jane Street, who's leading this, is the most interesting one. So Jane Street is a customer of theirs and also led the round. Now they do investing. They're a global quantitative trading firm, so it makes sense why they're a customer. We're talking about like enterprise fintech and needing this. But I haven't seen this in a minute. Like it's not something you typically see. You see a lot of VCs going into this. So what are your thoughts on Jane Street? Did you know who Jane Street was?
No, no, I just learned this now. I mean, I saw the name on the list when I was doing my research, but I didn't have time to really dig in. But yeah, it's like you're right. It's not the typical investment that this company is. Like a hedge fund, or what do they do?
They do a little bit of everything. Here, I have to go like dig into my deep research
Okay.
for them. Did I lose it? So they basically, yeah, global quantitative trading firm. They're famous for building some of the most demanding distributed systems in finance and for preferring homegrown infra. So they do definitely, as a financial institution, they're also investors too, but they set the bar really high for investors, which means they're not often investing in a Series A. Now, I think they obviously are using the product, and they've been quoted as saying, like, no other product could do this. We tested a lot of different products, no product could do what Antithesis can do. And so it's a pretty strong signal, I think. The only thing, anytime like a demanding customers, your leading investor. You're going to build for their problems. And so that's going to make them probably a really good financial institutions tool. Maybe it will be fine across the board. But I just thought it was interesting for them to be investing earlier than they typically do. Not a name we see very much when we're talking about AI investments. And it's a good signal of like this product fucking works.
Yeah, I mean, the amount that they invested, I mean, definitely they sitting on a pile of cash or money, so they could do that. But I'm also wondering how did they do the calculation? I mean, um this is financial institution, it's definitely something that they could do. I don't know if this was just a one event or um or they really just having them as a part of the strategy at this point. So probably need to do my own research more on the Jane Street.
Yeah, love to hear feedback from anyone if they're more familiar with Jane Street. The other ones are Amplify Ventures. They've invested in Datadog, Fastly, Temporal, Polar Signals, Spark Capital, Tiger Beetle, Polar Signals as well, Funbox, which is fintech, Terramat Global, First in Ventures, Teamworthy Ventures, Big Round, and Hyperion Capital. I think what kind of brings Like, there's, like, a similar mental model for all of these. It's people who've backed companies similar, like Datadogs, Fastly, these, like, infra tools that are helping engineers and going into that market, Tiger Beetle style databases, AI products, and then actually Stripe's CEO, co-founder. There's a couple of angels in here too. So Patrick Collison is a co-founder of Stripe. He participated in this round, which is interesting just in terms of the way that Stripe builds, very developer friendly and API first, which I always like. Who are the other people? A podcaster that's deep into AI and a few other angels. So they have a lot of resources in terms of both individuals and VCs to help support them. It makes sense with a round this big. Um, but I think it's a pretty big conviction round. Like, I think it's hard to say this isn't conviction. Feel free to disagree with me, but it's a lot of money.
Oh, it's a lot of money, but I think there's a there's a lot of signals here that you don't get anywhere else. I mentioned that the team is experience is not kind of the first rodeo. They've been in a space. They can piggyback on a bank on this. Like it's like a there's plenty of stuff that they could advertise about themselves that is just convincing for these investors to come in. And also, let's be honest, when you have angel investors that are well known individuals, um, I think this is attracting these companies, right? These VCs, right? Because they sometimes they just even don't understand what the company does,
Yeah.
right? I'm not saying that that's the case here, but sometimes they don't. But they what they really pay attention to is just everything around and who they dealing with. I mean, think about this: you're raising 47 million, right, as a seed round, and you are in the stealth. So there's not a lot of traction you're going to get here, right? You don't do valuations based on the traction, number of users, revenue, all of that because that doesn't exist. And then you're getting a 200 million post money valuation,
Yeah.
right? So there is a certain multiplier here right away. So it has to come from something. First of all, somebody's even considering that type of investment, and then yeah, you're coming out of stealth, and you crack the nut, and maybe it's working, and the Jane Street says okay, it works for us. 100 million this. Um, yeah, I don't think it's a typical trajectory for startup, right? Like you needed to gain that authority and trust early, before you got any of that money.
Yep. Yep, absolutely. Do we wanna talk a little bit about the founders?
Yeah, I need to rely on you, here.
No worries. I like to learn about the people. That's my jam.
Yes, you are more people than I am.
You can talk about the financials all day. So co-founders, Will Wilson is the CEO. Dave Sh- Schurer is the CTO, and then actually didn't give me the COO's full name. Nick is the CEO, and so they all were involved in foundation. DB. We can talk a little bit about that. They were very involved in the engineering work there. Will Wilson, the CEO, former Apple and Google engineer. And then Dave was part of another exit, Visual Science, which was acquired, big data company acquired by Adobe. So he knows what it's like to build these distributed systems. And then Nick he was at Apple through the acquisition of Foundation DB. Previously also a CPA before moving into startups. So a good COO to have. I think you have a really strong technology team. It sounds like Will is kind of the primary external face, really explaining the product and the vision. While Dave and Nick are more on the deep engineering and operational execution side of things. It makes sense. They've all had exits. They basically have built something like this. This is kind of, in my mind, the next generation of Foundation DB. And for those of you who are like, what the fuck is Foundation DB? So was I. um, I did some digging here. So it stores data in a super simple way, basically a key to a value pair. But that does a lot of the hard work of like keeping your data safe when machines fail, spreading data across many servers, and making sure everyone sees a consistent view. So it's kind of like boringly correct software that you can build a lot of fancy stuff on top of. You can build a SQL databases, queues, and there's like this engine, the database underneath it that powers it. And so, like I mentioned, that was acquired by Apple. Apple then went on to go and make it open source. And so, like I know my company, which is where I've heard it before, uses this, right? Like it is a very smart way to build foundational databases. So this to me is like trying to do the next thing. Let's take that concept of like this really smart, simple way to build something and let's go apply that to like how do we test something and how do we test the production of this. So definitely a solid founding team and I'm sure there's many other engineers and people at the company who are excellent and have a pretty good pedigree if from Google, Apple, etc. to be coming in here.
Yeah, I think you mentioned the founders and the people that are on board on the executive side of the employees, and I just went on LinkedIn and I noticed, okay, so some of these people are 8, 7 years in this company, so the company exists for that long. That tells you know how much effort and resources they need to put in to make it work. So yeah, I think there's a lot of determination on the founder's side to continue doing this, and I'm pretty sure a lot of them are just passionate about what they're working on.
I think it's also nice to work at Google and Apple and have a few acquisitions because you can invest 7 or 8 years financially into a startup.
Right, 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 right. By the way, I love the description of the software engineer role on Will Wilson's LinkedIn page. You know, he says it was secret stuff.
I mean, it makes sense, right? Like, they are definitely building something they don't want other people to know about. They're creating and defining that new category. So, yeah, that I mean,
Yeah, definitely.
that goes into a little bit of, like, what are they raising this money for? So, it looks like a lot of it, is to build a go-to-market, like, they're really trying to figure out how do we go and push to have a really professional sales, marketing, and post-sales team? I think that you're going to see a lot of hiring in solutions engineering, field engineering. This is, as we said, like an enterprise product with a long sales cycle and presumably a pretty long implementation cycle. And you're gonna, this is interesting. Like as I was thinking about this, and we're talking about engineer and vibe coding and AI coding, I'm like, is this where engineers transition to? Like, they're gonna go and sell and implement engineering tools. So I think you're gonna see and that's down the road, but I think you're gonna see quite a bit of engineering tech heavy people in these go-to-market roles.
I think yes, especially when you selling a complicated software.
Let's talk about Antithesis from a go-to-market perspective. What are you thinking about in terms of obviously this round was very much focused on go-to-market, marketing, sales, whatnot, but what are you thinking about?
I think the market is there. I think where I struggle in enterprise space for the companies like this is that um, your product fit um, has a problem when you reach out and with the ROI and the kind of amount of change that you know the company needs to go through. So let me explain this. Like if somebody's buying this product and has an extensive testing organization, yes, it might be old school. You can call it, they're using the wrong applications, they're using the wrong process, all things that should go wrong or are wrong. Changing that in the large organization, that's a major overhaul. So yes, I'm pretty sure there's a process for this to have some phased approach where you're going unit by unit, et cetera, et cetera. But still, it needs to be an enterprise project. It's not something that you can just switch on one day. Here we go, right? Eureka.
Yeah.
Um, so so yeah, I think organizations need to start looking at this from this perspective, and I think as a vendor, you will need to do a lot of the consultative work in order to prepare these organizations. So that's indifferent, by the way, to what you would do. What would you do selling any enterprise project or product to these organizations? So that's a one big blocker. Another one is, of course, it's a potentially layoff conversation. So there's a brand and image type of cost to the company. Arguably in some geographies that's more acceptable than the others,
Yeah.
um, or element of scrutiny that the government will apply. I don't think it's going to be a huge problem, but I think the damage is there, right? If people are laying off, if people are getting laid off, it's hard to get a trust of these top talent people to come in. You know,
You're talking about Antithesis trying to hire or
no, I mean, if they're changing the game, doing the
yeah.
automated testing, you don't need these people.
Yeah.
Sorry.
You don't need QA people. I mean, that's AI in a nutshell right now, right? Like, I think I think that's a big part of it, and, we've talked about this a bunch of times on our podcast. It's like, if you're an engineer, you better figure out how to work with these tools and utilize these tools and provide your own ROI, but Antithesis still has to prove that ROI. I mean, I'm sure it's not as you mentioned, like, the integration value or the integration timeline and work is going to be intense. It's not going to be an easy thing to just turn on. Um, and so you're going to have to have companies that are willing to take that risk and have people that implement it. And then, it's like, okay, cool. Well, if we have the software that can do this, great, we don't need these people, and the engineers are gonna have to figure out how to make sure they're using those tools. But yeah, I think the macro trends there, like, software complexity is not getting less, it's getting more. Tolerance for downtime shrinking. I think they're really tapping into, kind of a new way of thinking about testing, not like, you know, "Oh, we're doing the best we can." It's really planning for future incidents, and it's not making that not an aspiration anymore. Um in terms of, like, the go-to-market itself, they're creating a category that is always hard. They're gonna have to invest in marketing and marketing to developers is specific. It's community-based. It is, getting into the right marketplaces. I think AWS and other marketplaces like Azure and others will have to be a part of their strategy. Um, but how are you thinking about kind of what their go-to-market tactics will actually look like?
I mean, if I was their consultant, and I'm putting myself in this privileged position for a moment, my recommendation to them would be to use Google's playbook when they launch their cloud business. Yeah. I think till that point, Google was perceived and was just creating this image of being a company that is super cool. It's hiring a lot of graduates. You can be yourself and all the nice things. You can walk in a t-shirt and call your customer, and that's okay. I think once you are in a cloud business, you hiring a lot of people with 20 plus years of experience selling to the Fortune 500. And guess what? These people wearing slacks and the shirts every day we're coming to the office. Why? Because their business partners are doing exactly the same. So um, that's where you just graduating literally in the business doing this process, implementing this process, and you have to hire people that are serious. I mean, of course, they're getting paid big buck for selling these big, large deals because they are large, and rightfully so, they're getting the commission. So yeah, that's kind of the advantage of wearing slacks and suit. When you enter these conversations. But I think I would recommend them something similar. Hire the right people that can that can sell this, or they were selling a similar solutions to the enterprise business only. So you have a right pedigree in the group, but I would supply and counterweight this with some extremely aggressive, SDRs that can demonstrate that they can get these meetings in. On the other hand, right? Because you don't need you need a definitely need the enterprise, but you need something that is having an aspiration to become an enterprise, and it's not as big, but it's getting there, right? They have a business that will heavily depend on your product. And I think investors will appreciate that too because they will see that your install base is a little bit more balanced out. So I think this kind of bifurcated approach would be my recommendation.
Yeah, I think and I wanna circle back to, like, the mid-market higher end of mid-market, but if you're selling to, data and finance companies, you gotta be a little more buttoned up, than the kind of your typical, tech companies. AI's, who knows, so probably a little bit of a middle ground there depending on what they're going after. Totally agree with you. I think it's gonna be very consultative sales with, like these salespeople are gonna have to be very smart. That's you always have to really know the technology to sell to developers. And then the other thing, there's nothing I hate more than an unintelligent salesperson anyways, but it's even more important here. The only other thing I would add to that is like, and I think Google did a good job of this with cloud. I don't know if it was right away, but they certainly do now is channels. Like you're gonna have to show up in marketplaces. You're gonna have to work with other, agencies or like the Deloittes and Accentures of the world who are going in and making recommendations and have them selling your product too. And I think the consultants are going to be really powerful because they're going in and assessing risk all the time, and this should limit risk, right? And so that's going to be an important part to the strategy as well. So it'll be interesting to see. I think they mentioned going into the AWS marketplace in this announcement too, which and they're probably already there, but making a bigger investment into there.
Yeah, yeah,
Yeah.
they're but that's a very good point because I think um, uh, a lot of these deals will require glue, and I see the solution engineers to fill that gap. Right, we talk about the consultative selling here, and I think there's a need to have someone as a partner that helps you also to plan this properly. Right, not only on the technical implementation, but also here are the things that you probably won't need. These are the things that you will need because you're adopting this new way of doing things. Right, this changing this process and moving into the antithesis or
You
antithesis.
got it. You did it.
Uh, so is a paradigm shift. It's not a major. It's not a small change. So I think as a someone who is a service provider, you have to create this safe space for your customers that they feel like okay they have a partner. It's not just a vendor. You're a strategic partner. Um, So that's probably closer to your department, essentially. What I'm saying. So it's a huge change. So you need to have that glue. The mid market, because you mentioned it, I think naturally they have to have some alternative at some point. I'm not saying they should have it now. That of course it requires extra investment, and that's something that the board and the executive team need to determine. Even though this market looks very large, being big, and maybe looks like um, I would say more like a low hanging fruit. You need, I think, there's a high risk. These companies often shifting the strategy. They they trying to repurpose a lot of these resources. They're changing the product quite often. Um, I'm not sure if this product would benefit sufficiently being in that environment, and I would love them to challenge me on this. I would love that.
Yeah.
Um, but on the other hand, when you go to these large strategic accounts, there's a stability, right? Once you implement this, you adjust, and someone is sticking to your methodologies and the way of doing this business. So uh, I think it helps them, right, with the adoption. Um, so so yeah, that's another thing that I would keep in mind in the context of, mid market, large enterprise, and how they approach this.
Yeah, I think we're getting into will it scale or will it fail? I think that's an element that I've been thinking about. So this round's going to give them quite a bit of runway to really expand that go to market. And I think that's going to be very telling of the scale factor. I think if they're able to get into a lot of enterprises and they do it before, other platforms and vendors try to encroach on what they're doing, they're gonna have a really good business case. And then the secondary or, good exit plan, the secondary thing is like, could they go down to mid-market? And maybe they choose to never do that. If they can really own the enterprise market, then who gives a shit about the mid-market? I'm leaning towards scale. This is
That's a
just a
bold
huge
statement. There's a lot of people that you're gonna piss off with that comment.
I mean, I do think
That was rude.
I think it is often I think it's hard for companies that are targeting SMB or mid-market to go enterprise. I think it's hard for enterprise focused businesses to go down market. Now you're gonna have some of those growth mid-market companies or certain verticals in which that you could go down mid-market and they're willing to pay the amount of money, but you basically have to make a lesser if you're an enterprise, you have to make a lesser product, or you have to figure out how to be really efficient to go into mid-market. Um, so yeah, my thoughts is they'll scale. This is a pretty large round as long as they nail the go-to-market over the next, 1 to 2 years. What are your thoughts?
Yeah, so I have a three arguments for reasons to scale, and I have a three
Of
reasons to
course,
fail.
balanced.
Yeah, I mean, yeah, you want to see both sides, but I think that's inevitable in any company that you're running at that stage, right? Especially with this, remarkable investments that they received. So I think the first one on the positive side, the bull case would be, they I see them as a kind of maker and checker indispensability in the AI era that is emerging. Um, I think the industry shifts towards the generative computing more and more. So that is this the environment where AI agents, write the majority of the code. And for the same reason, the bottleneck is shifting, right? So before we were just in the bottleneck of, hey, I can't generate this code fast enough. Now you can generate this immediately, and then the bottleneck is moving to the verification, right? So it's more on the output side before you deploy, and so on, so on. So I think humans are not designed to audit the kind of the AI generated code at the speed which is produced. Right? That's the that's the shift that is underlying, behind this product, right? So I think these guys they position themselves as an automated checker and to the AI maker, right? So it's a combo, and that is providing the only scalable way to verify the correctness and accuracy of the autonomous agents um, that is creating this machine generated microservices. I mean, that's probably the right description. Um, so if they successfully capture the verification layer of the agentic AI market, they become essential infrastructure. So they will be at the core of every big company, every company that is trying to do this proper way without staying in a long distance from the competitor, right? They becoming a standard. I think that's what was compelling for the investors. Another reason why I see this as could be a bull case is that it has a unmatched technical mode and um, high stakes validation. So what I mean by that is that proprietary hypervisor, right? The determinator, that's what they call, represent a massive barrier to entry, right? So exactly, exactly. So I think it's It's a little bit of the Nvidia case where they have a significantly advanced, chips that nobody else can match, or can produce on en masse, right? Or there's no so much versatility as they can offer, you know. So yeah, it took them 5 years to being in stealth to build and relies on the deep OS level modifications, right? They incorporate a lot of their experiences that they gain elsewhere. That's extremely important. And the technology has been validated. So Jane Street is not only investor; they were using it. They I think I saw on the website they have a Ethereum and MongoDB as well. So they definitely operate in the multiple different environments and proving the case. Um, and if these companies will provide the testimonials and say, yes, this significantly improved our ability to deploy and margins, etc. Yeah, the moat is there. And they're gonna start monetizing. I think the third one is the shift from the services to the software in um uh reliability. And I think historically we had a distributed systems verification. And a lot of that was in the consulting space, right? There are companies that was extremely specialized in doing this. And that was mostly driven by the inability to do this in house at the on in scale. Um, but a lot of that was just done in a manual, semi-manual way. And I think the company is just productizing what they were doing, right? So this is a Replit version in that space because exactly, I had this idea that I was doing this manually, and suddenly I can just build my own application. Well, there you go. It's exactly the same process, of course, but done at the different scale, and definitely going to capture revenue across the entire life cycle of software development, rather than just being a one-off for this or that, right? So these are the three very, very compelling arguments for scaling and being successful. Among all three, I think the moat is the most compelling to me, because if you have more time, which most companies don't against the competitors, that's great. So moving into the more of the bear case, right? It's a first one that came to my mind was the Ferrari problem, right? I think the company currently is serving the elite 1% of engineering teams. They operate in the blockchain space, they operate in database, data science, all these high frequency trading. That's not a kind of main street software, you know, business. Um, and of course, these businesses they are known for correctness and the kind of high bar for accuracy. And I think the for average B2B SaaS company, you know, a brief outage or a minor bug is acceptable, and it might be cheaper to fix it in a kind of more reactive way than just being proactive and having this full blown model that is just running in a kind of black box essentially. So I think that's a big risk on their end, and we discussed briefly here, that they should eventually consider the mid market. I think that will be dependent on timing. But that's definitely a problem on the TAM side, right? So at some point, you will need to expand it. And I remember the Splunk case where they were tackling from the early days, the enterprise business, Fortune 500 companies, and they were just bleeding for years until they was sold, right? They were even publicly traded company with that model, and that wasn't great turnout for them. And the investors didn't make a ton of money selling to Cisco. I think it was Cisco.
Yeah, I think you're right. They're saying they need to build, like, maybe a Mercedes model.
Yes, exactly. Well, but maybe Mercedes, you can have a Maybach, but you can also have a Series C,
Yes, I Series C. That's
right?
the yep, yep.
Right. So I can see this kind of in the more versatile versions of the product that can offer multiple things
Yeah.
depending on how you're running a business and how much level of accuracy you need or complexity you have. So I think the second item that I see on the bearish side is the integration friction and more hermetic requirements to work effectively. The product requires software to be uh, containerized and in an environment to be relatively hermetic, right? Isolated. So it's almost like synthetic, in my opinion. Um, so the platform mocks many external dependencies, integrating the complex legacy systems that relies on the specific hardware, third-party APIs, and non-deterministic behaviors that can be operationally heavy, right? So there's a lot of friction with this, and if the friction of getting under test is too high, adoption will stall outside of greenfield projects. So
I think that's every legacy's company's problem right now is, like, I think you're in a and I agree with you, that's definitely, like, the a bear reason, but, like, if you're building an AI company right now, you're so fucking lucky from an infra perspective because ultimately, and I think about this often at the company I work at, like, we're gonna have to spend some time just rebuilding infra. Like, you just have to. I think we're in such a new paradigm of what platforms look like. You're gonna have to invest in that, or you're not gonna be able to keep up. So, it's like that's gonna happen at some point. Large enterprises should be able to invest in that. It's like figure out that balance of, like, how much do you invest in that versus laying people off versus all the trade-offs of where that money's gonna go. But agreed that it's gonna take some time.
yeah, it's going to take time because I think the history tells us that that's exactly what it is. I remember, Silicon Valley had these multiple waves of new technologies that were emerging, and they were announced as a kind of inevitable sweep and of what was done in the past, and that never actually happened. I think that's like there was a big data. Okay, big data. Okay, sure. Yeah, it took us years, and still you have companies that are not doing fucking big data.
No.
The adopting. I think the second wave I remember was the cloud. Okay, so the cloud. Everybody was going to be cloud. Okay, we're best position. They were best position. Okay, oh
Now I wish I sometimes I wanna have on-prem servers because cloud
yeah,
is so fucking expensive. Yep.
yeah, and in the meantime, you still have a lot of on prem, right? Like
Yeah.
it's look at Oracle. Like look at so many publicly traded companies. People don't even realize how much dependency they have. You read their the earnings announcements, documents, then Q reports and all that, and you're gonna start seeing like, okay, well, this is still on prem. There's a lot of on prem. I'm not saying they're not moving to cloud, but it takes so many years. Um, I think that will really depend on the customers of these companies and the products, and what the customers want to see in the product. Having something in the product doesn't mean that people will use it. There's so many examples that didn't happen. So I still think AI. I think is just more fundamental change because it's affecting almost every single business. But still, it's going to take a moment, right? It's going to take a moment. I think we might start seeing like the rupture of the kind of the model that some companies follow, some industries follow, but um, it won't be as big as people think, right? And I know I'm just giving like a very vague description because nobody can draw the line. Actually, nobody, right? There are those alarmists somewhere saying, "Yeah, it's gone. This is just done." We don't have a job. It's like, yeah, there's a risk. There are layoffs. We're not trying to deny this, but there's still a lot of people that have a job or they continue to have a job, because of this new thing that is emerging. So yeah, there's a transition. Now, the last one I have on the list on the bearish side is that there's a cloud dependency in the margin pressure, right? So I normally you wouldn't pay too much attention to this, but I think the Wall Street is clearly giving us the indication, hey, this is what we want to see. The top line growth is one thing, but we want to see the margin expansion as a result of implementing AI. And as you implementing this tool, you know, antithesis, right? Antithesis. I don't know which antithesis. Um, it's it heavily relies on the AWS. So there's um in this instance actually it runs on its nested hypervisor technology, right? So it's because it's so autonomous and in a lot of ways and it's independent and it's creating these universe like if what if scenarios. Yes, it's gonna create a pressure, right? So if they cannot maintain the strong efficiency through their time warping technology, like simulates hours of work and minutes in computing, I think the margins could be squeezed, right? And that pressure will just mount, especially if you're working with the large businesses. They have a ton of data. They haven't utilized a lot of the data. So it's really a question, what you really want to do, how you want to do it, and configure. We're going back to the glue people, that are solution engineers, that will need to be sensitive to that.
Yeah, and really set up like, a solid implementation plan of, like, what are the pieces of your platform that are must run all the time versus the piece of the platform that don't need that or whatever it may be, but it's gonna have to be a pretty strategic implementation.
Yes, yes, and I think key here will be a pricing and packaging. So, so if the margins could be are in danger and will be, in squeeze mode, you know, um, I think the customers become price sensitive to usage based testing and costs during the economic like downturns, and the pressure from the publicly traded companies that's going to be bigger, right? Because if you're on the hook to deliver certain expectations because that's a consensus in your industry and your peers already are there, yes, you got to be careful.
Alright, so what do you think? Scale or fail?
I think it's gonna scale, and it really depends on how quickly they can get out of that limited 1% and can offer the um, cost-effective models for these companies.
The Mercedes
Yes.
Series C, my favorite car I've ever had.
I I think if I was someone who's a CTO, a CIO in the large business, I everyone has their own risk tolerance, right? But I can't. I don't think I would be in a position to accept the high risk coming from implementing completely new way of doing, and at the same time having a high risk of high cost.
Yeah. Yep. Yeah, it's like you gotta find that balance of, like, risk and
Yep.
cost, and depending on how big of a company you are, that's gonna be a little bit more open to risk from
Yes.
a cost perspective, so
Yes.
that all makes sense. Exit paths. I think you kinda nailed this. They've built the moat. If they become essential infra, I think they could IPO.
Absolutely.
I think this is our first one that we've said we think can IPO, but this could kinda be, like, the future of this is just what you do. Like, you use Antithesis when you build a platform at X amount, X size, and status quo. Now, that's saying as long as their competitors don't come up and do something similar, but with the moat they have, I think they have a good shot of that. Um, Tons of acquisition paths too, depending on how things go. Cloud providers are one, that could definitely be a use case there. Incident management platforms, Datadog, PagerDuty, platforms like that. Other CI/CD tools like a GitHub or a Harness or Microsoft has Copilot and other tools. And then database and data infra vendors. So MongoDB, Snowflake, Databricks, Tiger Beetle type players. Like there's a ton of ways that this could go and it would make sense. They're kind of building like the next version of testing. So why wouldn't these tools that have been in this market for a long time say, hey, we should just buy this software if they're big enough? What are your thoughts on exit path? Anything I missed there?
Um, I think exit path um literally determined by the price tag. I think some of these companies you mentioned, I don't think they can
They're
or
not
will
big
be
enough.
they can afford buying this
The cloud
company.
providers are probably the
They
ones
do.
that would be,
They
yeah,
definitely can.
yeah.
I think but for them, they need to start seeing the adoption. And for now, they are very much into kind of AWS environment, and they're focused on that. So I'm pretty sure they're thinking about expanding, and we're probably working with all these, you know, Azure and others, Google, right? Um, GCP. Um, so, but they will probably need to have a little more proof that there's overlap here, right? Because they're serving such a big large variety of different companies, and they want to ensure that if they pay that much, that return is somewhere in the kind of realm of possibilities.
Well, and this goes back to, like, if they can move down market a little bit, it becomes a lot more appealing because this is just another, price point or margin point that they can or fee they can tack on to their services. But if it's only servicing, the 1%, is it worth it?
Yeah, yeah, I think it's definitely that. It and also I think the investors they want to ensure that if they were buying the vision of creating a new standard in a very human or manual driven work, um they're getting a cut out of this, with the proper size. So so yeah, there's a lot of things on the executive team to juggle before they make a call when these offers are coming. Maybe they're already coming. We
Yeah,
don't know. Uh, but I think the longer they stay on the path and they acquire more of these customers, they expanding out of the 1%. I think they increasing the chance to just have a really good deal.
yeah, agreed. Anything else?
No,
Any
I think
last words?
my last word. I think I'm my thought on what the product was of that I think they really roboticized this space. And um I observe this across the different industries. We always thinking about the robots that are physical, which
Yeah,
is true. That is of course more tangible, and with our eyes we can really see that it's happening. But I think that robotization, started a long time ago in a software business, and this particular company is showing us how quickly something could shift when the product is achieving a level of automation.
yeah,
I'm not saying it took them, it took them a while to get there, but once they're there, from here the automatization is progressing, and it's almost in an autonomous way, which is almost like a robot.
yeah.
So
That's the
that's
next wave of, IPOs and unicorn-ish businesses, I think. We've seen, like, automation with, payments and this and that, and it's like, okay, well, how do we actually automate how you build things? That's kind of the era
yeah,
that we're in here,
yeah,
which is exciting and, scary for some. But, yeah, this was super interesting. Not a category I pay much attention to because I'm not a software engineer. But something I do pay attention to is how do software engineers build things faster and
yeah.
get
Take
things to
the hard
market quicker. And so it
totally
was fun
fast.
to dig in and really understand what they're doing and learn a little bit more. So
Yeah,
great. Well, we think it will scale. I'm betting
I'm betting it's
IP.
gonna scale big
I'm
time.
betting that IPO. I'm going for it, or whatever they want, and, yeah, well, great episode. We'll see
Yeah,
everyone next month.
let's pick something interesting.
Do our best.
Well, yeah, thank you.